Hey everybody, this is Paul doing a quick little YouTube video, just a portfolio update. I was going to do a video yesterday when the market was down, just to go over my thoughts about, not selling, that type of thing. So today the market's up. Looks like it's recovering whatever happened yesterday. It had some kind of COVID scare, I guess that was the narrative. Um, you can't pay attention to narratives because yesterday kind of looked like this big disaster of a day, and it was like, oh, Delta variants everywhere, and it's gonna do this and it's gonna do that, and that was the big news story yesterday. And if you sold, you completely missed out on this recovery today. So yeah, unless you're a day trader who knows what they're doing, you're you could lose a lot of money. I mean, especially if you sold yesterday, because I would mean if I had sold if I sold everything yesterday, for example, I think I might have been like 400 down. It was just one of those days where I was like, I'm not even checking this because it's kind of pointless. Um, I mean, that kind of looks like the kind of pattern the market's in right now. So here's my year-to-date performance, 10.75%. This hasn't updated with today's numbers yet, obviously. S&P is doing really good, actually, really good. 15% so far. Um, that's probably because they have a lot of banks. I think there's a lot of bank stocks in here. Also, Nasdaq's actually recovering. I'm starting to fall a little bit behind, so I have to kind of look at my portfolio, see if there's anything I need to add. I'm thinking about things like Home Depot, probably adding that back into the portfolio, but I'll have to kind of see at the time. So let's see what we have here. Um, right now, the current investment strategy is basically what I said before. Um, it's basically, just focus on dividends. If I logged in yesterday, my portfolio was down by like $500, or I think it was down by a lot yesterday. But if I logged in yesterday, it was down by a lot. This number was the same. I log in today, this number is the same. So that's why I say that's my main focus at the moment. So the market is currently open. It's 127 Central Time, and it's just market's just kind of doing its weird little thing that it's been doing lately. Based on barely any news, it drops by a lot, and based on barely any news, it rises by a lot. And there really isn't too much going on today. The So that's kind of what we have right now. I haven't added any. I don't believe I've added any positions. I can double check just to make sure. Let's see. So here we go. Sold. Yeah, same. Last thing I did. So the portfolio's just kind of been just treading water at the moment. Just basically going a little bit up, going a little bit down here and there, just kind of staying steady. I will be adding around the 15th when I get that child care tax credit. I'm going to invest that to. I'm probably going to invest like 200 or 300 of that. The stock I will probably buy with it. Might add one share in a home or Walmart or something like that, or maybe a few shares of Verizon. So what I like to do is I normally like to look at the ex-dividend day because this tells me when I have to be in a stock buy. So for example, if I want to get paid on the second, for example, I would buy maybe 2 shares of CVS, for example. And then also obviously you got things like Maine and you have O that I could always buy. But that's just an example of something I would consider buying. It's probably something like CVS maybe. Walmart's got something coming up here. They pay in September. But so if I look at August, so August is trailing a little bit behind. You can see there. So probably going to buy like maybe a few shares of CVS to bump up that position. And then that's kind of where the portfolio is at. Like I said, it's just kind of moving around with the market, trading up and down. Still positive for the year, obviously, so I have nothing really to be concerned about. And the market's just kind of doing it's just kind of doing its own thing. Um, it doesn't take much to tank this market, and it doesn't take much to make it rise again. It's just in that range. At some point, it's going to take off, but the thing I was telling somebody yesterday is just kind of like, I could stress out about like the Delta variant and all that stuff, and like I can imagine that it's going to cause issues for the market later on this year. I can really imagine it because in my state of Louisiana alone, we only have 30% vaccine coverage, and it's a high tourism state. So, you know, you can kind of do the math. There's going to be a lot of cases here. You can already see it in the UK. You know, they had all these football games and whatever, you know, the soccer games, and now I think they had 35,000 cases just yesterday. That's a lot. And they get a whole bunch of people in soccer stadiums that aren't vaccinated, and this is what you get. So just kind of clicking through so you can kind of see. This is also the fully paid lending program. As you can see, it's still paying. There's still a few people that are short these international things that I'm in. So this is the Japanese one. I believe this is the United Kingdom one right here. So somebody out there is paying, you know, paying money to short these stocks. I made 16 cents or whatever, right? Free 16 cents on something that's just kind of sitting there and pays out once a year or twice a year. So that's these two right here. Could be more, you know. I could buy a whole bunch of shares of these, and then whoever's shorting them, you know, they need more shares to short. So they're counting on these to go down, which is kind of funny. But yeah, it's kind of a thing. So that's that fully paid lending program I was speaking of. So that's just money on top of, you know, the stocks I already own. So that's just money that gets paid out once every or on the 15th, I believe. So I think that's pretty cool. And then I trust these long term, so I'm gonna hold these. They're not going anywhere. But as it stands right now, the portfolio is just kind of riding steady. Today's a good day. If I'd posted yesterday, it would have been looked like a bad day, but I would not have moved a single penny yesterday, and I'm not moving a single penny today. So you know that's why you just can't day trade it, or else today I'd be like, oh, Regions is up. Let me try and get out of this position since I'm down a little. But this is a long-term position for me, and it pays a 3.27% dividend rate, and it's it has a 13 P or 12.5 PE. But if you look at the one that everybody buys, which is the big one, so if you look at JP Morgan, 12 PE, and in Louisiana, these two banks are directly across from each other. And a lot of people in Louisiana actually trust the smaller banks over the bigger banks. Once you get into the South, they trust the tinier banks. Another one that's in the local area, I think it's Hancock Whitney or Whitney Hancock or something like that. But that's another one that's pretty big in the area. But I'll probably end up adding more shares here. At some point, I might just jump back into JP Morgan. I would hope it would come back down, but it would take a lot for it to come down. So it's just everybody loves that bank. So for example, why I'm buying that over this, JP Morgan, $155 stock with a 2.39 rate or dividend rate quarterly, and then Regions right now with a 3.27. It's just kind of an easy buy for me at the moment, even though they essentially have the same PE ratio right now. So yeah, that's kind of where the portfolio is at. Like I said, by the next time I do a video, I believe there's the 15th. So I'm trying to do a video maybe Thursday or Friday. If I get that money, whatever, I'll do the video that day so I can actually show you me investing that money, maybe $200 somewhere. And then hopefully by then the market just kind of gets out of this range. This is the range right here that we've been in this whole time. So yeah, leave any questions below. I'll be happy to answer anything you got or any suggestions whatsoever. Just let me know. Thank you so much.